What is whole life insurance? Whole life insurance is a type of permanent life insurance policy that never expires. It stays as long as you pay the premiums and can even last your entire life. The premiums stay the same. It also has a cash value, which means part of your portion of your life insurance premiums go into an investment account that you can tap into later if you so choose to. What's the cash value of whole life insurance? Cash value is essentially the investment side of a whole life policy. This is what everybody talks about when they want a life insurance policy that also has an investment. The cash value is the side account inside an insurance policy that generates interest and grows over time. And this is why whole life premiums are so much more expensive. It's because not only are your premiums going towards paying for the actual life insurance, but they're also going into the investment account, which is the cash value. Who is whole life insurance for? This kind of insurance is best suited for risks that never go away, whether that's estate planning or setting aside money for the next generation. It's also great for those who are in a higher income bracket and have maximized their TFSA or RRSP and are looking to put their money in another tax sheltered vehicle outside of the other options available. Finally, there's also some niche cases where a whole life insurance policy really does make sense, like funding a trust, providing income for children or a dependent with disabilities, or even as a contingency plan if a business partner dies. These are a few cases where a permanent policy, more specifically whole life insurance, makes a lot of sense. What are the disadvantages of whole life insurance? First of all, it's a much more complicated product. A lot of people are buying into it, not really understanding how it pays out, how long they'll need to pay for, and what the actual return is on their investments. First and foremost, people get this policy in place thinking that they'll be making their money back or be making money off their life insurance, when in fact, in a lot of cases, that's not the situation. People will end up overpaying for their insurance and overestimate how much cash value they'll build up. They don't take into account the amount of fees and interest that comes with servicing these types of policies. And in the end, they either leave themselves uninsured or devote too much of their money towards these policies instead of looking at other places in the financial plan, like their TFSA or their RRSP.
Term life insurance is life insurance that lasts for a specified period of time. It may be 10, 20, 30 years, or anywhere in between. This type of life insurance is usually the best we find for Canadians because most of the risks we face in life are temporary in nature. If you think of a mortgage or your kids, one day they'll be grown up. They'll have an income of their own. They don't need your money the same way. And then you don't need life insurance. So why pay for the expensive whole life insurance when you can just get the affordable term insurance for the time that you need coverage for? And if you're ever confused and want some advice, you could always give us a call. We're always happy to help. We're non-commissioned advisors, and we're here to tell you the honest truth, no matter what.